right, guys, today is Monday, October 15th, first day of the week, first trade of the week, and yes, we are going green. I just locked in, as you guys already know, $126 in profit. Not too shabby to start off the week, and even though it's not the biggest gain in the world, I'm very happy with it just because I'm starting my week green, and the majority of you guys, probably 99% of you guys, are absolutely killing it in chat as well. This was my favorite play. I've been talking about this play for the past hour and a half now, and I want to dive into it and talk about how I knew the stock was going to break out. We put this in the alert box as well. At what time? This was in the alert box, I believe, at right around like 9:45. So you guys had more than enough time to make sure you guys are ready for it. Do where is it? AGRX 9. Yeah, right around that 9:55. So about an hour ago, we were all set for the 99-cent $1 breakout. So very happy with that one. And let's talk about how I knew this was going to break out an hour ago or over an hour ago, because we put the alert in at 9:55, but we're even talking about it, all the way back here towards around that 92-cent mark when it was all the way back at around like 9:43. So let's take this one back and talk about from scratch. How did I know AGRX was going to break out? How did I know the stock was going to get a nice pop? How did I know this was going to be the best play today? Well, starting off, let's talk about this whole entire day and then lead up towards AGRX. When we woke up this morning, we had a ton of news. We had a ton of activity in pre-market. We had a lot of still concerns with the SPY to see what the markets were going to do. Futures are lower this morning after the biggest weekly loss and declines for the Dow, S&P 500, and NASDAQ since March. Strong gains to the major averages on Friday still left the Dow and S&P 500 about 6% below their most recent record highs. Excuse me, guys. We saw this morning the SPY not really falling too much. It did have a little bit of a fall, but you can see like right now it's just trying to hold up its gains. And this is where a lot of inverse ETFs such as us, playing TVIX or maybe looking over at like UVXY or any inverse ETF, was going to be able to work last week. And this is where a lot of our profit was. And we weren't able to play a lot of penny stocks last week because not really too many penny stocks are moving, right? The top gainers last week were like 20%, 18%. They weren't really getting too much activity. So I didn't play nearly any penny stocks last week. I was focusing more on TVIX inverse ETFs. Now, waking up this morning, it's a brand new start. Waking up this morning, it's a brand new week. Traders are going to say, hey, let's see if we can get some activity back into the penny stock world. With that being said, a lot of traders immediately looked over to EARS. And EARS has been a pretty decent play. We woke up this morning and this was the best one in pre-market. We looked at EARS and this thing was being a nice beast. It went all the way from $1, moved all the way up towards around 150 in pre-market. It really got some momentum. It really got some eyes. It got some attention. It got volume back in the penny stock market. So even though I didn't touch EARS, I'm happy I wake up and I see volume in the penny stock market. I'm happy I'm seeing the stock moving. Sometimes you wake up and you see a stock up like 100%, and even if you didn't play it, that's okay. Even if you didn't touch it, that's all right. And why is that? Because that means traders are at least here. If you wake up and you see nothing up at all, that's not a good sign because that means no one's touching anything in the penny stock world. If you see stocks that are up, between 25 cents and $25 on the pre-market scanners, that means volume's here, attention's here, hype is here. And seeing EARS, up a good amount, up about 47% in pre-market, I'm saying, hey, this is great. Last week we didn't have anything because the whole entire markets were going through their correction. The SPY was dumping. The SPY has been dumping for like the last 3 days straight. So I thought today would be a great area for it to, start consolidating, maybe start finding some sort of base, maybe start moving on up a little bit. And if it starts slowly moving on up a little bit over on SPY, no one's really going to want to play TVIX because TVIX isn't going to be able to bring them any profit. And this is where everyone was playing last week, playing inverse ETFs or going off the SPY. And if these aren't really moving too much, if the SPY is just sitting right next to its open and TVIX is sitting right next to its open, traders are still going to be here. Traders are still eager. They're still hungry to trade. So what are they going to go do? They're going to go back to their regular scheduled programming, which is what? For us, it's going to go back to our penny stock world. So I saw EARS, and EARS definitely a very nice play. Why didn't I want to touch EARS though? EARS, this play was just too close to its 200-day moving average for me. If I got in maybe at $1, awesome. The stock could run all the way up towards around that 163 mark. But I wouldn't have been able to get in on this play until, the day opened on up, which is around 140. And could I've gotten in, for a 140 all the way up to 160? Yes, that's still, pretty solid. But, just being all the way up here with a 47% gap up, with only having about 20 cents left before it hits its 200-day moving average, with the stock, having potential to fall, with us not seeing any breakouts last week in the penny stock world, I wasn't really wanting to take that chance. But once I saw EARS again, be able to hold its gains and be able to slowly move on up, I started saying, hey, you know what? We actually do got some good volume here. We're not seeing stocks just collapse. We weren't really seeing any sort of breakouts the first 30 minutes or so. We weren't really seeing any sort of giant rips and runs that we're able to hold, but we were seeing volume. We saw EARS, slowly move on up. We saw NIO get a quick pop this morning, and come back on down. And then we also saw AGRX, start moving on up a little bit as well. So let's talk about AGRX now. Since we kind of understand, the market conditions, I see AGRX, and AGRX, this one's a familiar play. And this was a play we were actually looking at last week as well, because AGRX went all the way up to around this $1 mark, tried to break $1, and it couldn't break $1. So today, I'm seeing AGRX start moving on up, popping up on the high of the day momentum scanner. And I'm saying to myself, AGRX, this one that looks really familiar. Why is it? Typed it in. Notice this. Oh, yeah, this was looking for that $1 breakout last week. Why was I so concerned with this one? I remember really liking this one. Well, first off, let's just put $1 potential right here. If we break $1 and can stay above $1, $1 breakouts can be absolutely huge, right? $1 breakouts are awesome plays, where if we can consistently move on up and hold above $1, that's great. What's the criteria for a $1 breakout? A lower float. That's criteria. Criteria also is building higher lows, and the criteria also is being underneath $1 for at least 5 to 6 months, right? So let's kind of start this off and let's see what we have here. So first off, let's look at the float. Let's look off the float right here on AGRX. And if we look over on AGRX right here, go to statistics, we can bring this down. The float's 21 million. Not too bad. Now, is that, very low? Is that like a 2 million in float stock? No. But a stock underneath $1, 21 million in float is rather low. And, something that could easily get a lot of, good attention in. Is the AGRX, has this stock been underneath $1 for the last, at least 5 to 6 months? 1, 2, 3, 4, 5, 6. Yes. Now, it did get a little break right here. I definitely understand that. But it's coming back on up. This was very recent, and it's looking to break $1 and be able to hold above $1. Not just, touch it for a second and dump back on down. So I was still looking for this, $1 break. On top of that, are we building higher lows? Yeah, on the daily chart, we've been consistently moved on up. We're trying to test it here. We weren't able to hold. It's trying to give it again on like a U-shaped pattern. I definitely like it. And on top of that, something I really enjoyed was the gap to fill. This stock, about 7 months ago came down to 250, dumped from 250 and opened up at $1, and then, has just been sitting underneath $1. So now, again, breaking this $1 mark, we have a lot of room to run. We have this whole gap to fill. So a lot of people, again, don't really know what gap to fill are or like how it can help you. Still, like, quick illustration. If you guys are, again, playing a stock and the stock is all the way up here and it starts falling, it has like bad news, and the next morning it gaps all the way down to here, and then over 6 month span it kind of does nothing and starts slowly building its way back on up. What do we have right here? We are going to be having a big area where the stock can run. Because what holds stocks up, right? What's going to hold stocks up? A lot of times it's, chart patterns, old history and chart patterns, chart resistance, old chart support. But if we have the stock, having all this room to run right here, and there's no chart right here that's going to slow this on down, once the stock breaks this mark right here, that's where the stock could easily continue to, keep on going, pop right on through. Next day, just rip until it gets all the way back here again. Because there's nothing, again, as we said, stopping it in this channel. Now, once it gets here, it's going to have all this old resistance again. But, stocks run very well when you have a gap to fill, just like right here. So that's why I really like the AGRX. Now, AGRX, we got a lower float. We have a stock building higher lows. We have a stock that tried to break $1, wasn't able to break $1. We know $1 is, again, the strongest resistance line in penny stocks. When you do break $1, you get a lot of good time hype. Again, quick little examples could be like CANN, nice one about a year and a half ago on this one. on CANN, broke $1 right here. Notice again, underneath $1. Actually may have had a little reverse split towards it to rise it on up, but it was underneath $1, underneath $1, underneath $1, and went on a massive rip all the way up to $10 right here. That was a very great one. One I'm just thinking about off my head right now. And then seeing this, AGRX, underneath $1, big time gap to fill. I'm saying to myself, what? Hey, you know what? Not too much volumes over on SPY right now. The markets are trying to consolidate, hold their gains. Penny stocks are not seeing any sort of giant breakouts right now, but this is my favorite pattern. Also today, I didn't have my full funds. Again, I only had $1,700 to trade with today. Usually when I trade, I need a day for my funds to settle. I use a cash account, so I can use my account. But if I use the majority of my account, they have to take a day to settle. So I only had $1,700 left because I traded twice on Friday. And with that being said, I only had limited funds today. So I was only able to, I wanted to find a stock that I was able to trade with at least 1,000 shares or so. Right here, AGRX, I was able to buy 1,600 shares on this play. Now, where did I buy the stock? Where did I want to get in on this play? Well, I saw the stock moving on up, and I said, hey, you know what? Okay, we want to look for a $1 breakout. Now, we don't want to look for the $1 breakout right after this big climb because there hasn't been any sort of pullbacks yet. There hasn't been any sort of consolidation yet. There hasn't been any sort of real reasoning behind this play yet or any sort of pullback where it wouldn't just dump on us. You know what I mean? Like, we don't want to play a stock that just has gone straight up. And I say this all the time, and a lot of traders still get confused on it. Like, if we buy a stock that just goes straight up, what happens? It's going to come straight back on down. Like, if we go straight on up, it goes straight back on down. You want to look for a play that's, moving on up, coming on up. And when it gets here, it comes back on down. But you know what? It holds its gains and maybe moves on up a little bit and then comes back on down and then moves on up. And then this is, again, consolidation. If you want to see a stock go straight on up, this is full of buyers right here. I was going to try to spell out buyers right here, but it's kind of a little hard on the mouse. So this is full of buyers. And what do buyers eventually turn into? All of sellers. Right? So you want it to be a little bit more of a gradual climb where you have buyers move up, then you get some sellers, and you get some buyers, then you get some sellers, then you get some buyers, then you get some sellers. So like right here, I didn't want to play AGRX right here. I'm saying, hey, it's great that it's come up to $1, but let's watch for it to have some pullbacks. Let's watch for it to have some consolidation. I even talked about this earlier in the day. What's the breakout, model? When you see a stock go on a nice big breakout, what do you want to look for? There's a couple different stages again. You want to look for your morning rip. Then you want to have your pullback. Then you want to have your consolidation. Then you want to get your next leg on up. These are the 4 points of a breakout. And we could do a whole lesson on this in the near future. But you got your morning rip. That's 1. You get your pullback. That's 2. You get your consolidation. That's 3. You get your 4, your next leg on up. And I will do a lesson on this in the near future. I'm going to do a lesson on hiccups as well. I'm going to do a lesson on the 4 points of a breakout. I think this one's cool. And then I'm also going to do a lesson on the masterpiece pattern. That's, our kind of next 3 lessons coming on up. But really quickly, again, what is this? Morning spike gets people aware of it. Number 2, pullback. We're going to need a pullback so it's not just all buyers and not getting dumped on. Number 3, consolidation. So strength. And number 4 is going to be our next leg on up. So in our upcoming lesson, we're going to go over each one of these points and talk about why it matters. But I went over that this morning as well. So that goes off of, boom, right here. 1, 2, 3, 4, right? So AGRX, I went over the 4 points of a breakout in my head. And that's how, again, AGRX, I didn't want to buy it at the first $1 touch, came back on down, consolidated, moved on up. Again, break through this 99-cent mark. That's where I hopped in on it. 1,600 shares, as we know, locked out of this play, was able to make $126 in profit. So that's why, this play was, so great. Here got in at 98 cents, and then you got a nice pop all the way up to 107. Was able to make $126 right there. So very, very exciting. Also, when it was coming on up as well, got 200 shares at 96 cents. So again, 98 cents, and I got 200 shares at 96 cents. Got out at 107 right there. So that's when this stock started getting that nice pop. And you guys can see I wasn't even perfect on this play. I was not perfect by any means on this play, because what would have been a perfect on this play? Perfect on this play would have been getting in right here at 92 cents. Perfect on this play would have been 94 cents. Perfect on this play would have been 95, 96, 97. Again, I didn't buy 1,400 shares until here. Again, so there was a big volume pop before I even got in on this play. There's a big volume pop before I even got in on this play. And that's where the stock started going on a nice rip. And that's where the stock started getting a nice run. I got 1,400 shares at 98 cents right here, and that's when that stock went on a nice run. Perfect, again, would have been down towards 88 cents or maybe 90 cents or 91 cents or 97 cents or anything like that. But, it was an awesome, awesome play. We started talking about it since this morning. We had it on the alert box the previous hour, and, it was absolutely great to see the stock, go on this big time rip, go on this big time play. On top of that, guys, what I'm super happy about, as always, is showing off your profits to everyone. And, we saw profits all over the place from, small little plays all the way up to, over $3,000. So, we're getting 185 bucks, even quick little 65 bucks, first trade ever, awesome. 215 bucks right there, 140, $100, $100, 187, 310, 180, 106. Again, you got your nice little small, quick little gains. Hey, money's money. Take a quick 84 bucks, quick 100, 1100, 87, 150, 110. We got a 202, 430, 28 bucks. Again, just take your quick little profit. 740, got some EARS gains. So, awesome job, guys. And as I say, those little gains today are going to add up. Why did I lock in my profit? Why didn't I hold this out throughout the whole entire day? Why am I not, holding this all the way up to 215? Because I was preaching what earlier? I was preaching, hey, we haven't seen a breakout really yet today. We get a nice volume push. We get a nice, a pop up towards resistance. Let's lock in our profit. Because I was saying those small little gains add up, right? I made 126 bucks today. Let's say I make 126 bucks every single day. 126 times that by 5. That's $630 for the week. But I know when trader, stock trader, you drive, super nice cars, travel the world, live in mansions, that's what I want. But those little gains add up, and that's what you have to understand. You can't always be looking for a home run hit, make, $9,000, $10,000 a day. Those days are going to come, but you guys have to be willing to lock in your profit. So, we have 126 bucks a day, times that by 5, 630. Let's times that by 4 for the 4 weeks in a month, 2,520 bucks for the month. Let's times that by 12 for the year. $30,000, 30,240 bucks. Again, you don't have to be a full-time trader to be able to make $30,000 a year trading these, stocks. $126 a day, $630 a week. That could lead towards, again, $30,000 of extra income every single year for you, right? Now, obviously, if you're doing this full-time, do you want to make over $30,000? Yeah, obviously, that's nice. Make over $30,000. But some people, again, go ahead and do jobs that they hate, jobs with long hours, working 4 or 5, or 3 to 4 jobs and, just make maybe $30,000, living at that line. This is us sitting at home today. I'm sitting in my home in my pajamas right now, quick $126. Is that life-changing? No, but it adds up. It builds your account. So awesome job today for everyone who locked in profits. Way to see the predictable play on AGRX. Sniped it out of thousands of penny stocks out there. This one right here is the #2 best top gainer. And it's been, very profitable as well. EARS, EARS is more of a gap up. That's the #1. We nailed the best runner actual, in the market hours. But, very happy for the trades that made some money. So, again, let's carry out. My trading, obviously, is going to be done for today. I just used my $1,700 in funds. And other than that, we're going to get ready for this afternoon, and we're going to see if there's any swing trades. But I'll have full funds back at it tomorrow and maybe trade a little bit bigger, especially if we start seeing, penny stocks this afternoon start moving a little bit. Volume starts coming back a little bit more. We can start attacking, start going big at it. So awesome job today.